Let's bring our market panel back to react to this. Jackie DeAngelis is still here, but we want to bring in Scott Martin from Kingsview Asset Management. He's also Fox News contributor. Danielle DiMartino Booth from the Federal Reserve, former Federal Reserve advisor, and Dion Raboin, Axios market reporter. Thanks to all of you for joining us. Danielle, let me start with you. So that's so interesting. So now we see that the market is pricing in another Fed cut, and you're starting to see a pattern here. The Fed cuts and the market rallies, and then it gives the president room to go back and hit China because we see a move up in the market, and then he gives it back. In the meantime, interest rates are lower, and that cushions the economy. I don't know. I mean, what do you think of that theory? We could see that replay again and again.
Well, but we've only got so much runway between the 10-year yield being at 1.74 and the floor. So we can't do this indefinitely, but it has been so intriguing today. You know, once we heard the 10% tariff announcement, then all of a sudden September began to get just about priced in. By the time we woke up this morning, it was 100% priced in. And now there's a 33% or so chance of a 50 basis point rate cut at the September the 18th meeting. So lower interest rates do indeed give the economy and the financial markets a cushion. But if markets begin to perceive that interest rates are falling for the wrong reasons, then we can see a little bit of upset in the markets, as we have seen today. I think perspective is key here, though, given that stocks are still so close to their all-time highs.
Yeah. Dion, my theory from the beginning has been that the president does not want to make a deal with China, that what he's trying to do is separate our economy from theirs, to isolate them in the world, that they've been playing this long-term game where they roll out Huawei and infrastructure in everyone's electronic infrastructure, that they become a military power, that they're an economic power, that we're dependent on them for trade, we're dependent on them for pharmaceuticals, that he sees this as a massive threat. And what he's trying to do through all this is get companies to move their manufacturing out of there, to basically wean the Western world off China. Do you think that that is possibly true and the market is waking up to that?
Ooh, I gotta fan myself here a little bit, Melissa, because that was a hot take you just put out there. And look, the thing is, the president may want to do all the things you just said, but you've got a whole lot of folks in the markets and on Wall Street that are going to lose a whole lot of money if that's what he actually does. There's so much of the U.S. economy that's tied into the Chinese economy. Supply chains have been built through China that can't just be undone within a year or 2 years. And the other thing is, people don't know if he's really going to institute all the sort of threats that he's put forward.
Yeah.
A lot of talk was about, you know, this is just a negotiating tactic. He's a businessman. But now I think, as you said, the market is starting to realize that these tariffs, as they've been put on, we've been a year and a half now into the trade war, and this may not be coming to a resolution soon. I think that's very real. But the idea that there won't be a solution, or that we can't come to a solution, I think is going to cause a real massive sell-off if that's what Wall Street starts to price in.
Will it? Or, Scott, let me ask you. I mean, money's not stupid and money's not slow. They're not going to wait for the government to find a solution. So everybody with the brain has put together a plan B. We temporarily offshore this. We go over to Vietnam. Things are going through Vietnam to China. Everybody has gotten together and made some sort of plan for their company. Now, as it takes longer and longer, they're implementing that. So maybe the idea that this temporary plan becomes permanent and they don't go back to China, whether a deal is done or not in the long run, maybe it matters less. What do you think about that?
It may matter less, Melissa, but you're right. I mean, money isn't stupid, as it certainly runs away from stocks as it did today, but into bonds where it's being treated better. But, you know, talk to the companies, Melissa, that have put investments in China and factories like Tesla, for example, that have to back that out. And I think the one concern I have, well, it's a good notion to think about even India in a case where we could put some production in industrial type of expansion there. You got to think, though, about capacity that some of these countries like Thailand have, Vietnam, and so forth, as far as not just their own countries, but maybe other countries that they're trading with besides us that might be thinking the same thing. I mean, you know, China has had this expansive view for our sake, for the fact that they do have all the people there. They have the cheap labor. So it's a great longer-term solution. It's something that I think is definitely in place. It's something that Trump certainly wants to push. But saying that this is going to happen in a matter of months is a tough call versus years. And that's why I think the market's having, say, such a tough time adjusting to it on the onset here.
Right. Anytime you have to make a major seed change, nobody likes it, nobody wants to do it. There's a reason it's been easy to be dependent on China. It would take something painful to move everybody away. But Jackie, you know, down on the floor of the exchange there, what is the talk like, especially about the idea? So you devalue the yuan. What are the externalities of that? You're going to see investment of Chinese, their money is going to get out of the country because all of a sudden, you know, gosh, I got to get my money out of China while it's being devalued. What about that?
Well, that's a big issue, right? And this is what traders are focusing on at this point, is they're looking at the U.S. corporates, and they're saying, can they be nimble enough to move those operations around, as you suggested, to put these contingency plans in place and avoid any pain from not only the tariffs, but also this currency devaluation. If they can do that and report earnings and have good numbers, then nobody's really going to have a problem with this. And the temporary solution, as you suggested, is a fine permanent solution. The problem is going to be, in the anticipation today, is that corporations are going to struggle, at least for a quarter or two, as they adjust.
Yeah, no, absolutely. I mean, and that's where the
guys,
Fed rate
real quick,
comes in. And let me give it to Ashley. Go ahead, Ashley.
Scott, go ahead and follow up on that. I have another question.
Well, I think the only danger we have to remember, guys, is this is a very controlled, a tight economy in China. So, you know, things that we do here in the Western world are not really done in China. And so when you think about companies moving money around, you think about citizens, the poor citizens in China who've seen their currency get smashed, and it's probably going to get smashed some more. If they're thinking about moving money around and moving it amongst banks, it's not as easy to do there. And so that's another concern I have as this kind of plays out, as it gets more involved with these trade wars and these tariff on this and tariff on that. What exactly happens to some of the folks that are stuck holding the renminbi or the yuan as it keeps dropping?
That's a good point. I want to bring Danielle back in, if I can, on the Fed and interest rates. Look, there are $14 trillion right now that are yielding negative yields in bonds. The German Bund is down to minus 0.5%. You pay them for the privilege of borrowing your money. Europe, Japan, they're all racing to the bottom, Danielle. Aren't we forced to cut our interest rates in order to be, you know, to compete and to answer that?
Well, that's the real dilemma here, again, because we don't have a lot of interest rates to cut, and we don't want to be pondering in the United States of America negative interest rates. But we've seen appreciation today in the euro. We've seen appreciation today in the yen, which I'm sure the Japanese do not appreciate because their manufacturing sector is already in recession. So is that of Germany. The last thing that they need is stronger currencies. So their central banks, the European Central Bank, the Bank of Japan, they're gearing up right now. They're having emergency meetings, I can guarantee you, talking about whether or not they're going to be able to hold off until they formally meet to lower interest rates, or whether they're going to have to answer the action taken overnight by China to prevent a larger hit than they've already taken in their manufacturing, exporting sectors. Well, this is a big deal.
Right. It is a big deal. I mean, how low can you go? And, you know, to your point earlier and others, the economy is actually pretty good. We're in a very strange situation. Dion, let me bring you in. I mean, you know, how's this going to play out? There is a theory now that we won't get an all-encompassing trade deal. It will be incremental. We'll get little agreements here and there. Maybe not satisfying the market, but at least we're agreeing on something. How do you see this playing out?
Yeah, well, all the market wants is for the tariffs to stop. The U.S. and China can bicker all they want. What folks on Wall Street want is for the tariffs, which is causing an increased tit for tat, which means China has to retaliate, which means the U.S. has to retaliate. If we can come to some sort of ceasefire, that'll give the market what it wants, and we can start moving back up again. But the worry here is that we're actually going in the opposite direction, that we'll get more, another reaction from the U.S., which will trigger another reaction from China, and this thing could get really ugly. And all that's going to do is cost people money. So in the big picture of things, the tariffs don't actually matter. What matters is that we're on a trajectory now where things are going to continue to get worse for business.
Hey guys, I think it's ugly now. I mean, haven't we looked at what's happened in the last 6 months with the dealings with China? I mean, they backed out on a 150-page agreement that they agreed on. They walked out of the trade talks, about a week and a half ago, and just said, forget it. And then that's when Trump said, okay, fine, we'll turn up the heat on them. I mean, it's bad, Dion. I think this is the whole tip-off of, like, how things are really going to start going now, given the fact that I think the ceasefire's done. I mean, I think the fact that we poured all the water we can on this campfire that we're sitting around with them, and I think that's the problem here with why the market markets are reacting so poorly.
And
Yeah, I agree with you.
Jackie, very quick.
If I could jump in for just a second, I think what people need to realize is look at how Trump handled the situation with Mexico. Did he really ever mean it to begin with? No, he backed off very quickly.
Yeah.
The question that I had that popped into my mind this morning is, what if he didn't really mean that this 10% increase in tariffs was going to take place on September the 1st? After this devaluation, there's no way for him to back off of that, and that is why we saw bloodletting in the retail sector today. JCPenney trading down near its all-time low. Other Macy's trading down really low as well.
So you think the
These
tariffs are
companies
guaranteed
that are on their
September 1st?
knees, they don't have enough time to prepare.
Yeah.
And their margins are already as squeezed as they are. And that's why I'm saying this thing could backfire in that you could push the United States closer towards a recession by way of the fact that Trump now cannot back away from the fact that he has ratcheted up the trade war last week.
A patriotic boost in China. Huawei sales jumping 23% in the first half of the year despite U.S. restrictions on its business. So is President Trump's hardline approach backfiring in that sense? Scott, let me start with you. What do you think about this one?
Ellie.
Well, you know, this one, when we bring in national security, Melissa, obviously that, if we can say, takes it to even another level. So I don't believe that, let me put it this way, I don't believe that 3 or 4%, which it's not going to be. I mean, it could be 10% pullback in the S&P 500 is worth our national security. So I frankly like what he's done with Huawei, but I get concerned when we use Huawei as, say, a negotiating piece or a chip in the bargaining with China when it comes to be like, hey, we're going to let you guys steal all this stuff and be controversial if we can come to an agreement on a trade war, because I believe they're two separate things that we got to take very seriously.
Yeah, Danielle, I'm not sure. See, I don't believe that they would actually give that piece back. I mean, I think in terms of recognizing Huawei as much as they want to say it has nothing to do with the government, and any information that Huawei collects, it doesn't share back with the Chinese military. I don't know anyone who believes that. And the idea of isolating Huawei so that they are, I mean, maybe they take Apple's business inside China, but if you keep them contained and out of Western countries, you know, is that worth it? What do you think?
Look, I think certain things supersede all of the discussions we're having, and the idea of the Chinese listening to everything we do and effectively being spies, it scares the daylights out of me as an American. It should scare every single Western economy in the world. And again, I think that this is a subject that is much, much bigger than any trade war negotiation tactic, and that we should keep our eye on this for that very reason. I think we should keep the Huawei situation separate from that of what's happening in the markets, in the economy, with the trade war. I feel very strongly about that.
Yes, but Dion, how could you possibly keep it separate? I mean, you can't. I love what Danielle's saying. If that were possible, that would be great, but there's no way to keep it separate.
No, and the other thing about this is what's happening with Huawei right now sort of illustrates what could happen with U.S. companies as more Chinese are directed by the Communist Party to buy just Huawei or, you know, the various other Chinese homemade cell phone brands instead of buying Apple. Instead of dealing with Google, maybe they move away. As we've talked about on the show already, the Chinese government doesn't function the way the U.S. government does, and commerce doesn't function the same way. So if the Chinese Communist Party directs people away from buying Apple and other American brands, they could see very significant losses. China is a huge market for a lot of these companies like Apple, like Yum Brands, that affect a number of different sectors. And if they start losing significant market share, it's going to make a big, big impact on U.S. markets, because these companies, as much money as they're making overseas, they're still U.S.-based companies. That's another thing, and why I think this Huawei story is actually a much bigger deal than people are giving it credit for.
All right, Dion, thank you.